Hey guys, sorry I had some problems. Good morning everyone. Let's see if we can get this show on the road. Sweet, think it's working now. Could you guys just pop a message into the chat if you can hear me? Okay, so let's just wait for the rest to start joining in and yeah, then we can start. Thanks guys, good to hear that it's all working. How's everybody's day doing? How's everyone doing today? Any pairs on watch for you guys? Because what I'm going to be doing today is just analyzing my usual pairs, and after that, if you guys have any requests regarding any specific pairs that you would like me to analyze for you, yeah, you can now just pop in your pair of requests in the chat, and yeah, I'll make sure to look into it. Two more minutes and we'll get started. G Swiss, sure man, we'll have a look at that one. Okay, then without further ado guys, let's dive straight in. So to begin with the DXY, what can we currently see? Well, looking at the DXY and then from a 4-hour perspective, yeah, the DXY is just really messy this week. So if we just focus on the structure that we have over here, what you can see is that the structure of the DXY at the moment is very consolidative. Therefore, trading the DXY actively, and for instance, trading the Euro USD is pretty hard this week. So looking at the EURUSD, looking at the DXY at the moment, what we can see is that we came in from this descending channel into the lows, in towards that third trendline touch of the ascending trendline of the overall greater ascending channel. After making that trendline touch, what you also saw is that we had a fake out on the lows over here. So what I really like doing in general when trading is when I look at, for instance, the 4-hour or the 1-hour time frame, what I love doing is I always like to mark out swing highs and swing lows in price. And the main reason behind doing so is that if you mark at those swing highs and those swing lows, you can really easily find places within the market where a lot of retailers place their stop losses. So to give you guys a quick example, if we were, for instance, to mark out, let's say we mark out this swing high over here, what you often see in the market is that once the market moves back down in towards the lows, and when it comes back up, if the market fails to make a new higher high, so for a trend continuation up in towards the highs, what you'll see is that you get a fake out on the high, and after that you start dumping. And therefore you can really easily recognize points within the market where you're going to have a new swing high, which you can then draw in. And then what you're going to have to do is that you're going to have to wait and look and see if you're going to get another swing fake out on that swing high. Because if you get a fake out on that swing high once again, what you'll then see is that once again the market starts declining in towards the lows. So in this specific scenario, what I did also with the DXY at the beginning of the week is that I marked out this swing point within the market, and what we can easily see is that the market took out that swing high to absolute perfection before dumping back down in towards the lows. So after marking out this high, what we can now do is that we can now mark out the most recent and new swing high. So at the moment, what are we waiting for? Well, at the moment, what I see on the DXY is that after having this overall descending wedge slash channel, right, with the 1, the 2, and the third trendline touch, impulse in towards the highs, new higher high creation in comparison to this previous high. After that, pull back in towards the lows, currently situated at the 618 fib, and I am currently waiting for bullish momentum to come into the market on the DXY, because what I would like to see is one more push up in towards the highs if we were to drop down in towards the lows once again. Because looking at the DXY in general, what we can see is that the overall structure on the DXY is an ascending channel. So we had the 1, the 2, and then the third touch, dump in towards the lows, and now essentially what we have is channel maturement on the DXY. So I would therefore not be surprised if we do start moving back down lower, as we do have an area of daily demand within the market. And let me just show you guys that one, which starts over here. So just making it dark for a different color. As you guys can see, we missed it to absolute just a few micro pips. However, what I am expecting is that we could potentially still move into this zone before seeing more DXY bullishness. So once again, looking at what the DXY is currently doing, we're currently situated within this ascending channel, right? With the 1, the 2, and then the 1 and the 2. So I'm currently waiting for either a fake out on the high or a third trendline touch, which aligns pretty nicely with potentially the minus 27 fib extension. So yeah, that's the main level that I'm looking at, 90.450, or either a fake out on 90.310. So yeah, that is all, to be honest, on the DXY. If you guys have any questions about DXY further, please let me know. Could you detail how to use fib together with trading strategy? So the main focus when using a fib extensions or just using Fibonacci levels in general really comes down to the main focus that all you have to do is connect swing highs together with swing lows. So if we look at the DXY in this specific scenario, what we can then see is that we have the swing low over here, right? So that's where the fib starts for me personally at the 1 level. So what you then see is that you have the impulse all the way in towards the highs, you create a new higher high, therefore I have a valid fib. All you want to then do is that you want to draw the 1 or the beginning of the fib at the swing low and the 0 at the swing high. After that, what you can do is that you can measure the retracement or the potential retracement, and from there on look for longs. So how I use it personally is that I try to combine my fib levels with areas of supply and demand within the market, and therefore I can really enhance the probability of my trades playing out. If you're interested in any more education on fibs, please make sure to leave a message on my Instagram, which you can find in the bio down below. So for DXY, just waiting for one more push back up in towards the highs. So with the DXY discussed, let's head over to Aussie dollar. And Aussie dollar at the moment is moving back up in towards the highs. So not really surprised, to be honest. What we can see on Aussie dollar is that we faked out on the lows over here, right? So we had a swipe of the stop losses, by seeing this major wick down in towards the lows. So what I did is that I marked out this swing low over here. And that was my swing low for the day. And what we saw is that we got a fake out on that swing low. After that, started impulsing back up in towards the highs, and therefore that was a sign for me personally that liquidity had been taken, and that we could potentially see a new push back up in towards the highs. So at the moment, what we also saw was that we had this some kind of a descending channel. Not the most beautiful descending channel, however, it is a valid descending channel. So after coming in towards lows, we had some sort of a 1, 2, and then a third touch. However, pretty hideous. But just looking at price in general, we were correcting within a descending manner, which is a sign of bullishness to come, and therefore we could, or we can expect that we are going to start moving further up in towards the highs. So as you guys can see, I have this zone drawn on at around 0.77608. So this is an area of supply within the market where we do expect potential reversals to come from. However, one thing that you have to understand when viewing my charts is that the more times a zone gets hit, the higher the probability is that that zone will break. So what we can see with this zone at the moment is that we had our first touch, our second touch, our third touch, and every single time that we hit that zone, we see a rejection, right? However, the fourth time seems to be one time too many at the moment. So it does seem that we are going to break this zone, and we are going to start moving further in towards the highs. So what I'm going to be doing is I'm going to be deleting this zone, and I am going to be waiting for one more push higher, with my first target being over here. So at around 0.7778, and my second target being this larger 4-hour zone. So we could either reject from this 1-hour zone or this 4-hour zone, with the 4-hour zone of course being the stronger one of the two. So at the moment on Aussie dollar, I am expecting more upside. I am looking to trade Aussie dollar further in towards the highs. Mainly also if you look at the daily time frame on Aussie dollar, what I really like about the pair is that if we look at the way that structure has been formed, we can see down below over here on Aussie dollar that we have equal lows. So what do equal lows mean? Well, equal lows mean that people have their stop losses placed underneath the wicks, right? So we have the wick over here and we have the wick over here. So this wick never took out this wick over here, and therefore we can now know, or you can suggest, oh wait, sorry, it did. But essentially what I mean by that, or didn't, no it didn't, sorry. So what we mean, or what I want to say by that the wick never got taken out over here, is the fact that there are still stop losses placed underneath that wick. So if you think, like, how does a retail trader think, right? So where do you always want to place your stop loss as a retail trader? Well, you're going to want to place your stop loss underneath, let's say major lows or major highs, right? Or above wicks. So in this specific scenario, what a lot of traders are doing is that they place their stop loss underneath the wick. And what you'll see is that when you have those equal lows, you can really predict that the market is essentially at a certain point in time going to be taking out those lows. So as we can see, that was also the situation over here. We took out the lows, so we now know that all the liquidity from the lows and from that 0.766 region has now been taken out. So the liquidity that was situated here has been picked up, and from here we can start moving back up in towards the highs. So this is really a sign for me that we could start moving further bullish back up in towards the highs. So my essential or my long-term target on Aussie dollar is most likely going to be that 0.78338 region. Looking at the 4-hour time frame, what supports my bias? Well, at the moment we have this inverse head and shoulders, right? So we're currently breaking out of the inverse head and shoulders after making this descending correction. So currently breaking out of the descending correction after making this inverse head and shoulders. I would therefore love to see more upside on Aussie dollar. So first target is going to be over here. Second target is going to be that 4-hour zone. And on the long term, I definitely think that we can start pushing up in towards that 0.8338 region. So yeah, that's Aussie dollar. Let's head over to our next pair, which is euro dollar. And yeah, definitely pound dollar is also going to come. I will also do CAD Swiss. Gold is also there, and pound Swiss will also be discussed. So yeah, let's head over to euro dollar. And euro dollar at the moment, pretty interesting. Euro dollar is of course inverse to the DXY. What you'll really see is that euro dollar really moves, yeah, exactly inverse to the DXY. So where on the DXY we had a potential ascending channel, at the moment on the euro dollar we're seeing this descending potential channel. So euro dollar, once again, remember my story from the beginning of this YouTube video is that I always like to mark out the swing lows and swing highs. So what I also did on euro dollar was I marked out this swing low, right? So what you'll see is that once we had this swing low, stop losses are placed underneath. Boom. Swing low gets taken out, reversal up in towards the highs. So this could even be a trading strategy that you can use on a daily basis, guys. Just taking shorts when a swing high gets taken out, and just taking longs once a swing low gets taken out. So what I'm potentially waiting for now is one more push back down in towards lows. Currently we have this descending channel, right? So we have our boom, 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 and now one more potential test in towards lows before then potentially moving back up in towards the highs. So it doesn't need to happen, of course. However, this is the pattern that I potentially see evolving. So the overall structure on euro dollar this week is really, really messy. If we look at this, it's just hideous, not real, or not a real movement in towards the highs, or not a real movement back down in towards the lows. So at the moment, just waiting for some volume to kick in on this Friday. So personally, I would love to see one more push back down in towards lows. At the moment, we have this double top over here. So this is my double top area after making an impulse from here to here. So if we're to quickly draw in a fib, I don't know why. Yeah. So if we quickly were to draw in a fib, we're currently situated at the 618 fib retracement and situated at this double top. Therefore, I wouldn't be surprised if euro dollar were to tank further in towards lows from here. So yeah, really nice double top. We had this 1 hour bearish close. Looking at the 4 hour, yeah, also a 4 hour double top. Essentially, you could wait for the 4 hour to close bearish if you want to have more certainty in regards to this trade. Oh, excuse me. So furthermore, what am I expecting? Yeah, just one more push back down in towards lows, essentially. And as you guys know, either a fake out on this major swing low, or I'm going to be looking for that third trendline touch, or we could even see one more dip back down lower in towards that 1.21138 region, which would be my ultimate target, which I would really like to see get hit, as there is liquidity situated over here. So this is an area of demand within the market, which I would really like to get hit before moving back up in towards the potential highs. So yep, that's all for euro dollar, guys. If you have any questions, please leave them in the chat, and we will then continue and head over to pound dollar. So pound dollar is currently situated within my potential reversal area over here. So situated within supply on the 1 hour. So yeah, excuse me, I am expecting a push lower from pound dollar. So there are two ways to view this. You could either draw in your fib, right? And then say, okay, well, we have an area of support and resistance within the market over here at that 618 fib, from where I would like to go long. So that is an option, of course. However, my preferred option would for us be to hit that area of demand within the market down below over here at the 786 fib, so the gray zone. Yeah, that would be my preferred option. I would love to see price dip down lower on pound dollar at the moment after this major news move over here. So yeah, just correct back down a little bit in towards lows, potentially come back down lower in towards that 618, fly, or in towards demand and then fly further towards the upside. However, of course, that doesn't need to happen. What could also just happen is that we now currently just break this zone where we're currently situated at. and start impulsing further in towards the highs, as there is a lot of bullish momentum at the moment in regards to the pound. Looking at what we have further in regards to technical analysis, we can see that we still haven't taken out this swing high over here. So as you guys can see, I have this line drawn on, and this line stands for the equal highs that we can see over here. So into regards to my story about the equal highs and the equal lows and where stop losses are placed within the market, we know that stop losses are placed above all of these equal highs, especially if we draw on our swing high over here. What we can then see is that we never took out this high over here, right? So high, failed to break, high, failed to break. Let me just put on a line for you guys to make it a little bit more precise. So like this, right? So we never broke this high, right, over here. And we also never broke this high over here. So what does that mean, right? Well, essentially what it means is that there are still stop losses placed above these highs, right? For the people who, for instance, trade fibs, what they all do is that if this were to be your fib, they would go, let's say, short from either the 618 or the 786. Where do you place your stop loss? So think about it for a second. Where does every single retail trader place his stop loss? He places his stop loss above the highs. So, or above the fib. So in this specific scenario, the people who took a short from over here placed their stop loss over here, right? Okay, then once again, draw in this fib over here. So people who went short over here from the 786 or the 618, whether they placed their stop loss above the fib over here. So what's really interesting to see is that we still haven't taken out those highs, right? So I know for a matter of fact that there is still liquidity situated above those highs, and I would therefore like to see those highs get taken out. And that could happen today. We could just start impulsing up in towards the highs, see a fake out on, for instance, this swing high, and start impulsing towards downside. Could also be on this one, preferably, of course, this one over here, as then all the liquidity above those highs will have been taken out. Furthermore, one more push up even higher in towards this area of supply within the market is would be my preferred option. This area of supply within the market took out this uptrend, and is therefore a very interesting area of liquidity within the market, which I would love to see get hit. So that's essentially it for pound dollar. I hope you guys learned a little bit, or one or two things about how liquidity is positioned within the market, because what you'll really see is that, just to make it more clear, is that, look over here, we had a swing low gets taken out, boom, reversal in towards the highs. What you'll see over here is that we also took out this swing low over here, right? So that swing low got taken out, that swing low got taken out. So this is essentially the exact same situation that we're seeing in the lows that is now happening potentially towards the highs, right? So what you can see is that, boom, fake out on this low, fake out on this low. And now what are we waiting for? Fake out on this low, fake out on this low. Or high, excuse me. Because look, now where it gets interesting is that you can see, boom, boom, right? So look, focus on these lows over here. What you'll see, swing low, doesn't get taken out, boom, swing low gets taken out, reversal up, back up in towards the highs. So by really focusing on those highs and those lows, you can really get a feeling for where liquidity is situated within the market, and it's going to be just much easier to start recognizing potential larger reversal points within the market. So that's it for pound dollar. If you guys don't have any questions, I'm just going to continue onwards with our next pair, which is Kiwi dollar. So you guys know that I'm still in a short on Kiwi dollar. So I was running in some great profit took the short all the way from above here, from this area of supply within the market. So just letting it run. I have my stop loss placed above the highs. So yesterday nearly got taken out. And yeah, now price is just impulsing in towards the highs. So wouldn't be surprised if I do get taken out. We also have this inverse head and shoulders. So yeah, could potentially hit my stop loss. So let's see. Not really too bothered about it. Kiwi dollar, furthermore, is just a pretty messy pair at the moment. Not much to say about it. As we can see, we had this area of demand within the market, which we hit to absolute perfection. Started impulsing back up in towards the highs, and now once again, focus on the lows, right, guys? Focus on the lows. So what can we see? Once again, this is one of the most essential concepts in trading. Is that, look, stop losses over here, right? Because this low over here never took out this low, right? And this low never got taken out by either this low, and of course it's not this low. So what we know is that people have stop losses here, and people also, because you also have people essentially who draw on, let's say, just for the example, right? So people have their fib drawn on like this, from low to high, and they'll place their stop loss underneath this low over here. And what you can see is that, boom, what does the market come to do? Comes to take out those stop losses before moving back up in towards the highs. So at the moment, what points in the market am I looking at? Well, I would like to see, of course, this high at around 0.72418 get taken out. That's the major swing high that I am focusing on. I also do view this high as a swing high. So as you guys can see, for the people who draw on their fib like this, you can now guess, okay, the people who have this fib drawn on, whether they have their stop losses placed, they'll have their stop losses placed above the high, right? So it wouldn't be surprising if we take out that high over there. So yeah, for now, not expecting that much from Kiwi dollar. I'll just be waiting to see what happens. So yeah, let's head over to gold. And gold, I have my short zone over here at 19,7450. That's the place where I want to go short from. This is an area of supply within the market, which is really interesting to see. And I would love to see get hit. So what we could do is, boom, fake out on these highs, start dumping. However, preferably I would like to see 19,07,450 get hit before tanking further back down in towards the lows. Another option would for us to become to come higher, potentially even take out this swing high over here at around 1916 before then dumping once again back down in towards the lows. So this is an area of daily demand. This is an area of 4-hour demand, I think. Yeah, 4-hour demand over here. So yeah, either looking for a short on gold from here in towards the lows or from around 1916. So at the moment, not nothing else. So yeah, that is gold. So let's head over to the requested pairs, and the first one is pound Swiss. So let's just have a look at the daily on pound Swiss. So what we can currently see on the daily is, we had this massive run up in towards the highs, right? Massive run. After that, what you can then identify is that we had this low, this high, right? High takes out, this high took out all the stop losses positioned above this high. After that, started dumping in towards lows once again, right? So viewing this from a simple perspective, what we have over here is an area of support and resistance within the market, which is currently holding pretty nicely. Looking at it from a daily perspective, there is a lot of liquidity situated over here. So I would love to see this zone at around 1.30180 get hit. before tanking further back down in towards the lows. So yeah, that is my short region. However, what we could also do, what I'm potentially looking for, is that if we were to just mark out the swing highs, so what you can see over here, swing high, liquidity gets taken out, boom, dumping in towards the lows, right? So at the moment, what we have on pound Swiss is that we have this swing low over here, right? So swing low didn't get taken out by the market. Therefore, I would love to see that swing low get taken out before potentially moving back up in towards the highs, in towards that 1.30180 region. So yeah, that's pound Swiss, to be honest. Not a big fan of pound Swiss, mainly due to the nature of price. It's just not really that clean for me personally. Looking at it from a 4-hour perspective, what we do have, so look, what we had over here was an area of demand within the market. So we hit that level to precision. We take out the stop losses situated underneath here, right? Because look, people who go long, or let me just draw in a fib for you guys. Well, I'm not going to draw in a fib because then I have to change the setting again. But look, this is your swing low, right? This is your swing high. People go long from here, right? Because this is, of course, an area of support. So this is retailers going long from either the 618 or 786. Where do you place your stop loss? Stop loss underneath the fib. Boom. Stop losses get swiped. And now potentially one more move back up in towards the highs after also tapping into towards demand over here at 1.26124. So demand got hit. Wouldn't be surprised if we do start seeing more upside. At the moment, what is holding us back? We have this descending trend line. So I personally wouldn't be surprised if we do start seeing more upside on pound Swiss. We've already created a new higher high in comparison to this high over here, right? So essentially what we have is the trend switch. So you could see a potential push further back up in towards the highs from this region. One more dip down lower would be nice, to be honest. This area of demand on the 1 hour, would love for that to get hit before going long. However, we could already start impulsing from here and start breaking this trend line and moving back up in towards the highs. Just looking at the 4 hour one more time, the main area of interest for me would have to be this swing high over here, as there is a lot of liquidity situated above that high, right? Because as we can see, high couldn't take out, swing high, high couldn't take out, swing high. So now potentially moving back up in towards the highs either started, and then we will start moving back down in towards the lows once we fake out on this high, or we could start dumping from up here from this area of supply, and a dump from this area of supply within the market as around 1.30110, 1.30180, excuse me, would of course have the highest probability to start dumping from there. So yeah, that is pound Swiss for you. Let's see any other pairs. CAD Swiss is the next pair. So CAD Swiss, looking at CAD Swiss, pretty interesting. We had some sort of a double top formation over here. So we just failed to take out the highest swing high. However, we did tap in towards this area of supply within the market. So the gray zone is my area of supply. And as you can see, once we hit that area of supply, we did start tanking towards the downside. So I wouldn't be surprised if we do start seeing more downside on CAD Swiss if we don't react to this major swing low in a bullish manner. Because what could happen is that we just see a fake out on the swing low, start impulsing back up in towards the highs. Therefore, I would like to see what the next 4 hour candle is going to do. And what the daily candle is also going to do. Yeah, at the moment, pretty messy pair in my opinion. Has been impulsing back in towards lows from this area of demand. So we could start tanking further downwards. Just looking at the daily one more time. It would of course be very nice to start moving back down in towards the lows over here. At a given point in time, I would like to see this region in the market get hit. This is my main area of interest alongside this area. So these are my two major levels on CAD Swiss, which I would like to see get hit once again. As you can see, this area of demand, pretty interesting, got hit, major reversal in towards the highs, started impulsing back up towards the daily supply zone. So we went from daily demand back up in towards daily supply, and from there, yeah, we could potentially come back down lower, back in towards this daily area of demand, and see one more fake out on the low before potentially then moving back up in towards the highs once again. What monitor do you have? I personally use a Philips 24-inch monitor. I have 4 monitors, so I have 4 times a 24-inch Philips screen. Yeah, I don't know the exact model, but it's a 24-inch. I think it's 1440, so not 1080p but 1440p. Took a sell position after the W formation on the daily. Also the weekly and the monthly look overextended. Are you talking about CAD Swiss or? Just to check, let me. Yeah, weekly looks really overextended. I think you're talking about CAD Swiss, but the weekly indeed does look really overextended. As we can see, we came back up for the double top. Yeah, really beautiful to see us dumping from there. At the moment, weekly does have a lot of potential to come down lower, especially if we see this weekly bearish close. I will be looking for I will be looking for shorts further in towards lows. Oh, okay, Swiss yen. Let me have a look at Swiss yen then. But in the meantime, CAD Swiss, yeah, looks really good for some more downside, especially if we see this weekly close like this. It could be a very nice short opportunity. Swiss yen. Oh yeah, Swiss yen is super overextended. Looking at the weekly, yeah, so what we have in the market at the moment, yeah, so we do have this area of supply on the weekly, which we've tapped into. So weekly supply, looking at the daily, so daily took out this low. This low essentially got taken out, yeah, by this over here. Yeah, so we are seeing price stalling from here. Yeah, what I also really like about this pair is that we took out the high, right? So you can see fake out on the high. Potentially, yeah, it could start dumping from here. Going into the 4 hour. Yeah, really nice double top. This isn't an area of supply because this area didn't take anything out. So yeah, looking at the 4 hour, not that interested. Let's have a look at the 1 hour. Yeah, 1 hour is kind of like a head and shoulders, right? So we have the left shoulder, the head, and then the right shoulder with a fib like this. So yeah, a really nice 1 hour bearish close. Could start dumping further in towards the lows. Just not a big fan of the 4 hour, but the daily and the weekly do definitely look good for a further drop back down. Yeah, nice, man. I personally don't trade Swiss yen, so I'm not sure how my strategy works with the pair. However, yeah, the idea behind it does look good. So let's see if we can get a nice 4 hour bearish close. That would be very nice. So yeah, guys, if there aren't any other pairs, yeah, if you have a pair that you would still like me to analyze for you, please just leave a comment in the comment section. In the meantime, don't forget to subscribe to my channel or leave a like on the video. I would really appreciate it. So yeah. I guess that is all for today then, guys. Yeah, all I can say is thank you so much for tuning in. Yeah, I hope you guys enjoyed. If you would like to see more of these live sessions, yeah, just make sure to leave a like and yeah, essentially also a comment would really help me out. Yeah, thanks all for watching once again, and I can't wait to see you all this weekend during our crypto market outlook. One more short request: if you guys want to see any specific content on this channel, if it's any other kind of content that what I'm already producing, please make sure to leave a comment as well in the comment section, as I can start working on that possibly as well. So yeah, once again, thank you all for watching, and I wish everyone a great and happy trading day. Thanks, guys.